Hello, everyone. My name is Travis Trim. I'm the president and founder of the Finance Association of Laurentian University. I'm a third-year Bachelor of Science in Actuarial Science and Finance student at Laurentian. I'd like to say thank you very much for our guest speaker, Rajan Bansi, for collaborating with the Finance Association of Laurentian University. I'd also like to thank our volunteers of this association, in particular, our Vice President, Jason Sokolsky, and our associates, Nil Patel, Michaela Sheehan, Jackson Lovett, Emily Plater, Shrey Aurora, Nur Hassan, Jacob King, Alicia DeWert, Brandon Roy, and Jessica Ville. I also like to thank the students from the association or from the institutions who have joined today. Obviously, we have students from Laurentian University, but we also have students from Cambrian College, many local high schools, Schulich School of Business at York University, the School of Accounting and Finance at University of Waterloo, Rotman School of Management at University of Toronto, George Brown College, Ted Rogers School of Management at Ryerson University, the Goodman School of Business at Brock University, Telfer School of Management, University of Ottawa, the University of Manitoba, Humber College, Smith School of Business at Queen's University, Vancouver Island University, Ivy School of Business at Western University, Douglas College, Thompson Rivers University, McGill University, Sherbrooke University, the Stern School of Business at New York University, London School of Economics, University of Mumbai, Trent University, Centennial College, University of Regina, and Lakehead University. We also have some attendees from various corporations such as RBC, BMO, CIBC, Deloitte, Concentra Bank, the CFA Institute, TD, BDC, Bioenterprise Corporation Canada, Greater Sudbury Chamber of Commerce, Asante Wealth, the CRA, Boost Innovation Inc., RBC Wealth Management, IBM, TMC Wealth, Scotiabank, and Manulife. And this was only pulled from 250 of the registrants, so I'd like to say thank you from everyone. We also have students joining in from these institutions who are joining us internationally today, from the United States, India, Bahrain, China, Philippines, Brazil, Egypt, the United Kingdom, Singapore, Sri Lanka, and Saudi Arabia. So from our whole team, thank you so much for joining us from all over the world. Okay, so without further ado, let's begin the event. So as you already know, our guest speaker today is Rajan Bansi. Rajan Bansi is head of RBC InvestEase. RBC's recently launched robo-advisor, which has a mission to bring smart investing to a new generation of investors. Prior to joining RBC InvestEase, Rajan was the head of U.S. and Canadian fixed income strategies within the portfolio advisory group at RBC Wealth Management. He has also co-chaired the Global Portfolio Advisory Committee, which makes decisions with regards to the group's recommended asset allocation. Rajan is a CFA charterholder who obtained his MBA from Pepperdine University and an undergraduate degree in economics at the University of Toronto. An active member of the community, Rajan currently serves on the board of the Toronto Public Library Foundation and the organizing committee of the Writers Trust Gala. So thank you for joining us today, Rajan.
My pleasure. Thanks for having me.
So why don't we begin by you giving us a little bit more detail about your journey from your undergrad to where you are today.
Wow. In just 53 minutes, I can do that. I guess instead of giving you the list of my resume, which you're more than welcome to look up on LinkedIn, I would say the most important element of my journey, never discount the role that luck plays in your life, number one. And number two, never stop learning. I grew up, both my parents are not only immigrants, but factory workers. So when I was growing up, their perspective and how I was raised was if you worked really hard in school, which by the way, I didn't, but if you worked really hard in school and you got or achieved good grades, you'd get a job. I learned after my second or third year of university, it took me that long, that life doesn't work that way. It doesn't work that way at all. And by nature, I'm pretty shy and introverted. So this entire idea of networking and building a network, it just wasn't really something, it's something that obviously was talked about 25 years ago. It's not really just something that I did. But the reality is I finished university with a degree in economics, passionate about the markets, and I could not get a job. And it wasn't a terrible economy. Worse than it is now, believe it or not, but it wasn't terrible. The only job that I could get was in a call center with what is now Tangerine Bank, but then ING Direct. And what was interesting is that I was surrounded by probably 50 to 70 people my age of folks that had the exact same situation. Educated, had a degree, couldn't really get a job of what they wanted. I couldn't even get an interview, by the way. 3 years after my undergrad was finished, I had finished the 3 levels of the CFA program. I was 25. I still couldn't even get an interview. So I had to do some self-reflection. So I would say that's lesson number 2. So number 1 is luck. Number 2, self-reflection. What is my dream job and why, and what do employers want? And what I realized is that I had a lot of skills to pick up that I had not picked up in my undergrad. Some of them were technical with regards to financial modeling and business valuation. Some of them were very practical, and there's nothing more practical than actual work experience to show that I could do the work. And the third was building a network, because you've got to find people or groups of people who will take a chance on you. And I would say for the better part of the last 25 years, that has been my journey. And that continues to be my journey, to map out where do I want to go? What do I have that helps me get there? What do I not have? And how do I fill in those blanks? And for me, that journey has just never really stopped. And the objectives might change, and the goals and the skills I need to pick up might change. But recognizing it's a journey has not changed. So that's my creative answer to your question.
Thank you. So my first, well, I guess my second question is, what is the most important learning tool you've acquired in your professional career?
The most important learning tool, I would say, is feedback is priceless. So all of us, based on my own personal experience, I've just decided to speak for all of Earth. All of us are very sensitive. All of us really do care what someone else thinks, even though we might say we don't really care. So I try to convince you that they don't care what someone else thinks. They would be the first person. And I think everybody to some degree is just a little bit insecure. And once you acknowledge that that's part of your makeup and everyone else's makeup, I think it makes it a lot easier to accept feedback. And why do I draw on feedback? I'm a very competitive person. I am almost never the smartest guy in the room. I can promise you that. But I'm a very competitive person, and I'm driven to learn, and I'm driven to achieve. But the reality is, and I've received this feedback over many years of my career. Sometimes when you go to achieve an objective, you can bump into other people, and that could be okay. But sometimes you might bump into people a little bit too hard, and they feel that, and that matters. And I've received that feedback. But I think I received that feedback early on, and quite frankly, I didn't care. And I didn't care because I didn't really realize how valuable that feedback was, and I was just focused on achievement. And what I've learned over the course of my career is achievement without people is pretty meaningless. The entire, I think, objective of trying to be a leader, it's not actually about you. It's about making other people better, aligning people to a goal, to a vision, to a strategy. Different people respond to different forms of feedback. And as a manager, you want to try to find the right way, language, sequence, frequency to get folks to buy into whatever you're trying to achieve. But at the same time, feedback from them is absolutely priceless. So I would say anytime someone is giving you feedback, even if you think it's wrong or inaccurate, always give the provider of that feedback the benefit of the doubt and try to unpack it and see if there's something there. And even if it's not 100% spot on, there's probably something there, and that in and of itself is a gift.
Well, thank you for that. Our next question comes from Jackson Levitt. Please state your name, what you study, and what institution you're coming from.
Hi, Rajan Bansi. Can you hear me?
You bet.
Awesome. So my name's Jackson. I'm a senior associate at the Finance Association of Laurentian University. I just wanted to ask you, so we've been in a low interest rate time for a long time, since about 2008. And I just wanted to know your thoughts on discounted cash flow analysis, if it's still still a relevant tool used in the industry.
Sure.
Yeah, I just wanted to hear your thoughts on that.
So two-part answer. The first part of the answer will be very dissatisfying a word, unenjoyable. The first part of the answer is, I don't know. Like, I'm probably not the right person to ask anymore. I worked in equity research at RBC maybe a little bit more, close to 15 years ago. I worked in wealth management, and we did all of those things. But then I ran a fixed income desk, and now I've been over here. So I'm kind of removed from it 10 years. So how an analyst would think about discounted cash flow, especially in a market on the equity market side that's so driven by momentum, I don't know. But at the same time, I would take a step back and bigger picture. Even when I use discounted cash flow, you learn really quickly how much it matters and how much it doesn't matter. And we would use valuation metrics. I used to work with an analyst covering the transportation sector, and we would use valuation metrics that we would use various ratios, price to sales, price to earnings, even price to enterprise value, quite frankly, because they were convenient as a proxy. But, you know, I'm not gonna say garbage in, garbage out, but if it's easy to come up with, it's probably less reliable. And if you're, DCF, there's a lot more inputs to try to get closer to an intrinsic value. But at the same time, all you're really trying to develop is an educated guess as to what you think a stream of cash flows is worth. That's all you're doing. And you're going to come up with an answer, and you're going to compare that answer to what the market prices an asset at. And the market is your best proxy for price discovery between buyers and sellers. So if you come up with an answer that's spot on, congratulations, you've come up with a great valuation, but there's no way for you to make any money off that. So maybe not so great. If you come up with an answer that's way off, then, I think that's where your qualitative research comes in, and you have to determine, do you need to adjust some of your inputs to account for this disparity, or have you uncovered, based on your investment approach, a really underpriced or overpriced security, and then how do you position a portfolio accordingly? I can give you a couple quick examples. One, when I was doing my MBA, I was doing a valuation of Southwest Airlines. It was post 9/11, and my evaluation of Southwest Airlines suggested, I'm going to make up a number here, that the stock was worth $20, and the market priced it at $15. So I was like, wow, good buy in our investment club. We should buy this, and we bought it. Well, 3 months later, I think the stock was like $7, and I can promise you, the market really did not care about my discounted cash flow. And what had changed is the market's anticipation of flying patterns had been completely off, and price discovery between buyers and sellers adjusted, and you have a new price. The second example I'll give you is like actually putting it to work when you're on the sell side. And it's kind of a funny example, but it's also kind of disturbing. I worked with a really strong analyst who's still like the top ranked analyst still to this day in transportation. And we were covering a company in our coverage space, and we had a certain estimate for cost of capital, which obviously goes into your discounted cash flow. And it resulted in a valuation that was, let's say, $30. One of our clients who owned a position in this company asked for our model. We shared it with them, and they're like, well, you're not using the right discounted cash flow rate of return or cost of capital, sorry. And we're like, why? Like, well, we use 6% and you use 8%, for example. And after like a 20-minute conversation, like, why do you care? The reason they cared was when we were publishing our research, we were coming up with a value of the company that was lower than the value they thought was of the company. So that was just kind of interesting. It wasn't so much about the actual discounted cost of capital or the discounted cash flow. It was really about what's that end number you're coming to compared to what it is in the market. But I would say just take away, this is not a pure science. This is a social science, and you've got to combine your quantitative and qualitative to come up with a conclusion. And then you've got to decide what is your position going to be, and you've got to continually revisit and refine your approach.
Wow. No, thank you so much for that answer. That no, you really answered that well. No, thank you.
You're welcome.
What a great question, Jackson. Our next question comes from Surab Mendirada.
Thank you for joining with us today. My name is Saurabh, and I am a fourth-year student pursuing finance and economics at University of Toronto. I am a former employee at RBC Capital Markets, and currently I'm managing a fund of $1 million of focusing on emerging markets. So my question is related to the fixed income markets. We have seen a significant fall in the fixed income security yields from the past 10 years. What do you think the next decade for the fixed income market looks like?
I'm going to be consistent, just like the last question. I don't know. I'll walk through how I would think about that as an investor. But I would actually say for you guys, you're so lucky to be young. I'm not sure I'm the oldest person on there, but I'm up there. And I would say I would almost challenge the assertion that interest rates have been falling for 10 years. Interest rates have been falling for over 40 years. And if you want to see a bull market, please go look up the yield, 30-year yield in either Canada or the United States since the late 1970s. So yields have been falling for a long time, and that's because what are yields? Yields are essentially inflation expectations. So if you believe that there's going to be inflation, and what has historically driven core inflation, I think it's primarily been wages and the ability to pass on input prices to consumers. If you think inflation is going to go markedly higher, you would expect bond yields to go significantly higher. But as you go through, you mentioned that you're in fourth year. It's not really all that straightforward, right? Because if bond yields go higher, then borrowing costs go higher. And in an era where people have an enormous amount of personal debt, as borrowing costs go higher, it becomes more difficult to service your debt. And if you're servicing your debt, that makes it more difficult to buy other stuff. And if you're buying less stuff, that in and of itself is going to slow growth, right? So from my perspective, mostly as a consumer, as someone, I guess, in this industry, but as a consumer, I don't think yields are going anywhere this year. And again, I'm not the expert. It's hard to really see yields going significantly higher next year. For me, it's really hard to see yields going significantly higher anytime soon, just given all the different levers that have to be taken into consideration as to what drives growth and in turn inflation.
Perfect. Thank you.
Thank you, Surab. Our next question comes from Calvin Henderson.
Hey, Rajan, how's it going?
Good.
Awesome. So I'm Calvin Henderson. I'm a level 3 CFA candidate and analyst at Innova Wealth Partners. I have a non-technical question for you, and it's about the CFA program because, at this point in my CFA career, you realize very quickly you're exposed to this huge amount of information across a bunch of topical areas. And especially if you're really interested in finance, you kind of go off that, do your own reading and learn more about derivatives and this and that. When you're actually out working in the field in a given role, you're not going to be using a lot of that knowledge on a daily basis. And sometimes it gets very difficult to actually communicate with others, that you work with, friends and family, anyone you interact with where the markets come up. So the question I have for you is kind of a two-parter. Number one, how much of your CFA background knowledge do you typically use on a daily basis in your role today? And number two, how do you sort of translate your understanding of these topics into something that makes sense to others, but also still reflects your own thinking on the subject?
I'm going to answer your questions backwards, and I'm scatterbrained. So if I forget the first question, you're going to have to remind me by the time I get to the end of the,
it's all good.
Second part. I would say if I can give folks one piece of advice in this session is, without knowing you, I am going to guess that you over-rotate to Excel and coding and technical skills, and you under-rotate to being a very effective communicator. So if I were to really focus my energies somewhere, I would make sure I can write. And that might sound completely illogical in an era of technology and increasing automation. But at the end of the day, business is about relationships. And in order to forge, to get an introduction, to make an introduction, to really build relationships, you need to know how to communicate with people. And the baseline of that is obviously good spelling and grammar, but that's not really what I'm talking about. I'm talking more about communication, expressing, demonstrating empathy, understanding that business is not a zero-sum game. It is a positive-sum game. One of the best interactions I had probably goes back 10 years ago to there's actually a course I took on not-for-profit boards, was with, at the time, a senior sales executive at Cisco. And I was talking to him about how he makes a sale. And we were actually in a restaurant having a drink. And he's like, at the end of the day, I would walk into a place like this and I would look around and I would say, hey, I understand the vision for your business and this is what you're trying to do. And if this is what you're trying to do, here's where my solutions come in. He's like, but just as many times he'll walk into a place and say, I'm not the solution for you, actually. I think I'm too expensive and I want to see you do well and I want to see you succeed. I would suggest that for the problems that you're trying to solve, you go in this direction. And if there's a way that I can help you along on your journey, reach out to me. You can only do that if you know how to communicate. So if I think about the second part of your question, I think I think one of the problems that plagues the financial industry is people are intimidated by finance, and I think they find a lot of the terms confusing. But there's one thing true about finance that is true about everything else. Nobody likes to be made to feel stupid, right? So I always use the example of, I don't know anything about cars, but I mean, you guys are in Sudbury. Like, it snows in Toronto, believe it or not, and I've got to put on winter tires. I don't really know anything about cars. And when it comes time to do that transaction, I go, even though I've moved a couple of times and the business has moved, I go out of my way to a business 20 minutes further than I need to because I trust them. And because they've always had my back and they're very good at communicating what I need to do and why. And it's all in the communication. All right. So that's how I would say, like, the financial industry, unfortunately, I think a lot of people are intimidated by it. And when someone asks a question, the truth is, I think you just have to kind of demonstrate care. What is really the question? If somebody really wants to talk to you about a stock, you're probably not going to be able to talk them out of that stock. You might want to ask them why they're so interested in that stock. That's a very different question from someone asking how do they build a budget or a financial plan. And true to form, I think your first question was about the CFA, and the CFA is really interesting. The educational experience I had at the University of Toronto was absolutely amazing. The CFA, though, I learned more in the CFA than I have in any other educational, whatever the word would be here, approach or endeavor. I had a very different approach to studying maybe than some people. I read every page of every textbook because I wanted to absorb it. So I never would have got my job with RBC Capital Markets. I never would have got my job with RBC Wealth Management. And believe it or not, for my current job, I would not have been able to get this job. And the reason is I am the lead portfolio manager of this business. I'm what's called, from a regulatory perspective, the ultimate designated person. And in order to be registered for that portfolio manager position, I need to have my CFA with not just work experience, but with very specific work experience. And I would not have got that work experience in my last job were it not for my CFA. The CFA is very intense. There's a lot of information there. You may not necessarily need it for the path that you want to go in your career. You'd be surprised, though, how much of that information you will remember and you will apply. So I would say, the idea that you'd be surprised how much you don't use, to some extent, I would say that applies more to my economics degree than my CFA. With the CFA, you'd be surprised how much, I am still surprised how much I do use. And I've had I finished the third level of the CFA in 2001, so it's been 20 years.
That's an amazing answer. I mean, like, my experience with the CFA has been very similar to yours as well, with opening up doors, the amount of education that you receive. And what I found really interesting was when he mentioned communication skills, it made me think of Warren Buffett and his Dale Carnegie course, how he said that's, the most important experience he ever had, becoming a better communicator. It was a really good answer. Thanks.
Thank you, guys. Our next question comes from Michaela Sheehan.
Hi, so my name is Michaela Sheehan. I'm a fourth-year finance student at Laurentian, as well as a senior associate for the Finance Association. I'd like to start off by thank you for taking this time to speak to us today. We really appreciate it. So what I'd like to ask you is, for students looking to pursue their CFA designation, do you have any advice you can give to them concerning when they should register for it? So should it be right after graduating, or should they achieve qualified work experience beforehand? And then I'd also like to know if you have any general tips for these students prior to registering for the CFA.
I would say register as soon as you can, because you're as busy as you are, and I'm not taking anything away from how busy you are. You're all very busy. However busy you are, you're only going to get busier, and you are going to have less and less personal time as you go through your graduation, you go through building your career, you go through, different stages of your own personal life. I think back, I'm really thankful that I completed the 3 levels of the CFA when I did, because I recall when I was in wealth management, I had colleagues, I was single at the time, and had no other obligations, just my job. But I recall doing, or being in my role in wealth management and even in capital markets, and having colleagues who were married and with children and working the same hours and trying to do the CFA. And somehow they pulled it off, but it did not, I just really felt for them. It seemed like a completely impossible situation, because it is a very demanding set of expectations. And unless something has changed, my understanding of the CFA is you can complete the 3 levels, and it's just a matter of gaining the work experience over time that qualifies for use of the charter within a pretty generous window of time. So I would say, if you want to do it, sign up as soon as you can, number 1. Number 2, my advice is only sign up if you know why you're signing up. The difference between the CFA and then, I don't know if it's still around, but I think it is, the CIBV designation, any other designation outside of your degree, there comes a point where racking up courses and accreditations and degrees and letters, for those of you, again, applying my economics, there is a diminishing level of marginal utility. And it starts diminishing really fast after your undergraduate degree. So for some, maybe a lot of people, an MBA makes some sense. Maybe for a lot of other people, a master's in financial engineering makes sense. CFA might make sense. But the key is having those letters it makes you a little bit more employable, but it's not going to get you the job. It's all of the other activities and building out your profile that will help you get the job.
Okay, awesome. Thank you so much.
Our next question comes from Andrew Butera.
My name is Andrew Butera. I graduated from Brock's economics program in 2019, so a couple of years ago. As Raj was talking about there, it doesn't really apply as much as the CFA. I'm actually a level 1 candidate. My exam's been moved a bunch of times due to the COVID-19 pandemic. So Raj, I was reading about your background a little bit, and you were a part of this thing called a Global Portfolio Consulting Association. I had a quick question about that and how it sort of relates to ESG factors in today's environment, and how do you think those investments from them will do in the next decade?
I would say for anyone who's really serious about entering the money management field, ESG is it's for real. It's legitimate. I would think of it as a risk management framework. It's completely different from SRI, socially responsible investing. There's theoretically some overlap in terms of underlying values and principles, but they're very different. So there's an enormous amount of literature and general information out there about what ESG is, how it works, why it's used, and why over a full market cycle it should result in enhanced returns versus the same broad index that did not use ESG. I would leave my comments there because it could get, on the one hand, in depth, and then on the other hand, irrelevant. I think for the broader group, I would just say if you really want to go into money management, it's important. I think in some ways, ESG is probably used by all money managers, active money managers, whether they call it ESG or not. I think that will become more formalized. But there's some really terrific literature that's out there, even from the CFA Institute, that's obviously up there for free, for public consumption, that I've read. And it's good. It's good. We launched ESG. We call it responsible investing because, again, like the average person, ESG, they're like, what is that? But you call it responsible investing, they kind of get it. We launched those portfolios about 2 years ago. And, we put forward a position paper as to why we wanted to have those portfolios, what the story is. And there's a fundamental story there that I think, again, if you want to manage money, you should be familiar with it.
Thank you so much for letting me ask that question. And I wanted to just add another thanks to Neil for actually inviting me to this event. It's been excellent so far. So keep it up.
Thank you very much, Andrew. The next question comes from Shrey Aurora.
Good afternoon. I'm from Laurentian University and my program is BBA. I'm also an associate at our Finance Association. So my question is, what was your most challenging assignment till date and what did you learn from it?
It's not a warm and fuzzy answer. I would say the most difficult part of leading a team or just managing people, having difficult conversations with people is never enjoyable. Firing people, that is the worst part of the job. And for anyone that has ever managed people, it's the absolute worst part of the job because you are dealing with a human being on the other side of the table. And if you're gonna build a team and lead a team, you can only do that if you really care about people, in my opinion. And sometimes it just doesn't work out, and it's not always that person's fault. Like sometimes people, the overall business might change. Demand could fall off. They might have had nothing to do with the reason that you need to reduce the amount of headcount in your business. Other times, the individual might not be a great fit for the business and they're better somewhere else. So it sounds kind of abrupt to say, firing people, but like letting people go or just letting them know that it's time to move on to a new position is the absolute worst part of any job that I've had in managing a team. Thankfully, it doesn't happen a lot. But in a way, you always kind of think about it, and you think about it as you recruit people. As you recruit people, it's better to have a checklist for exactly what you want. And I would say for many of you who are in the job market, I think it's one thing to get a job, but like that's just the start of the journey. You want to stay there. You want to do well. And whether you stay at that company or not, you want to stay along the trajectory and maximize the trajectory of your career. So ask questions open-ended around how do you measure success for your business? How will you measure success for me? How often will we meet? When will we meet? What are some of the metrics you will judge my performance by? And there has to be very good alignment between each individual of the team and their direct manager, whatever level you're at. And I have that with my current manager, my last manager, the manager before that. So that's the hardest part of the job. That's just I would leave it at that.
Thank you for answering my question.
Thank you, Shrey. Our next question comes from Daniel Lewis.
Hi, Rajan. Thank you for showing up for this event and giving us your insight. So a little bit about my background. I did my double BA in political economy and philosophy, and I'm now doing the MSc in international business at Ivy. So really quick, my question is, do you believe that there's space for people in finance, given the rise of AI, robo trading, quant funds? And I think also someone mentioned like RBC robo trader. What do you think your like short-term and long-term outlook would be in general?
Sure. For perspective for everyone, I would think about it this way. Imagine it's 1980. Probably you're like, yeah, so I can't believe how old I am. Might predate some of your parents. Imagine it's 1980. And imagine being in one of these sessions in person where somebody's sitting beside a personal computer. This industry existed before the personal computer, right? This industry existed before Microsoft Excel. Imagine how the analysts felt then, right? Like, do you need me? You have this like machine. For you old movie aficionados, I think that's covered in Superman 2, by the way. But so I would say like technology is a tool, but business is done between people and business is done by relationships. So if you really think about where the potential lies in AI, everyone loves to talk about AI, but at the end of the day, when we talk about AI these days, we're really talking about machine learning. When we really talk about the applications of machine learning, it's what What's kind of boring and repeatable that we can give to a computer to open up someone else's time? I've done equity research. I can tell you, I never enjoyed going through an SEC filing, never. But a good AI program, if that was in a downloadable format versus a PDF that could not necessarily go through management's commentary, but to go through the metrics by segment on sales or geographic location. Imagine how quickly that an AI program would be able to pick up on trends that would make the job of an analyst job easier, right? That's an application of the tool that would open up the analyst time to make it easier so they could come to a conclusion. Computers can do a lot of things. Computers aren't really good at critical thinking. And if there's one thing computers lack altogether, it's creativity. Because as amazing as the advances are in technology and computers, remember where they come from. Human beings who have programmed them. So there will always be a role for human beings. And yeah, like I run a business that's colloquially referred to as a robo-advisor. That's not a great name. And if you want proof that that's not a great name, there is nobody who is putting up their hand saying that they came up with that name, and it definitely wasn't me. All we are is a digital or online investment management service. That's it. So for people who want to do everything from the comforts of their couch or their Peloton, on their phone, on their tablet, they don't want to submit any forms. They don't necessarily want to talk to anyone. And they certainly don't want to talk to someone in person. If they do, they want to be able to hit a chat button or call someone and reach out for advice. That's my business. And you know who else has that business? Uber and Uber Eats and every other food delivery service and Spotify and Netflix. And from a consumer's perspective, which is why our business exists, from a consumer's perspective, consumers don't really discriminate between industries. Consumers, rightfully, because I'm a consumer, consumers just think, I have this problem, how do I solve it? There should be a really convenient way to solve it. And I mean, how many times have you been doing something where you've just thought to yourself, why can't I do this on my phone? Why isn't there an easy way or easier way to do this? And that is what our business is doing. But a human being reviews every single application. Licensed and accredited human beings with CFAs and CIMs respond to client inquiries. And believe it or not, I am not a robot. So when people have to speak on behalf of the business, it is a person who has to do that. And, you know, AI done some things, takes away repeatable tasks. There has been an explosion in the number of people who are investment counselors, private bankers, relationship managers, licensed portfolio managers, because there's an explosion of people who do want personalized advice. And that is not going away. And that is a really, honestly, a really great, interesting, phenomenal career of accredited, wonderful, smart, capable people who are out there trying to help people. So a lot of jobs out there. Just got to align your skills and ambitions to what problem do you want to solve for people.
Awesome. Thank you for answering that question. I really appreciate it. Thank you, Rajan.
Thank you, Daniel. Our next question comes from Nil Patel.
Hey, Rajan. So my name is Nil Patel. I'm a third-year BBA finance student and currently a senior associate at Finance Association. And good seeing you again. So my question to you is that you said writing and communication is very important. And I want to ask you what kind of advice or tips you have for students and professionals to get better at it or to practice more of it.
To write. That's how you would get better at writing. And then to, as far as communication, what you've just done now, you've got to put yourself out there. And I think that's the chasm that needs to be, I had to do it, by the way, so I'm not criticizing. That's the chasm that needs to be crossed or jumped for graduating students. The next layer of your skill development is not in a book. It's not in a course. It's not at your school. You're all in phenomenal educational institutions, and what your professors and your leaders and those organizations have done, they've tried to teach you how to learn, and they've tried to show you that your brain is really plastic and it's moldable, it's malleable, and you need to always be building skills. But you've got to put yourself out there and you've got to do it. So from a writing perspective, you've got to write, and then you got to ask for feedback. So you've got to go to and then build up a network of people that you trust to give you feedback. I often tell the story that for me, and I blame myself probably more than the education system, I was a terrible writer. I was a really terrible writer. And what made me a better writer was the GMAT, because I would write the GMAT and I would get these terrible scores on the GMAT test. I'd be like, well, what is this? And I realized that I fundamentally did not know how to write. So I made myself study writing, and I studied the mechanics of writing, and I asked for feedback. And the funny thing is, I probably should have paid more attention to math, because I scored in the top 5 percentile when I actually did the GMAT of writing, and I got a perfect score in the essay portion. I don't know if there's an essay portion now, twice. And you might be like, well, why did you have to write the GMAT twice? Well, because I didn't really study the math the first time around, because I was like, I really got to focus on the writing. So I got like these really great scores on the writing and the English, but my math score was nothing to write home about. So then I had to spend more time on that. It can be done. And since then, the other way, I have to say, sometimes your best mentors can be your colleagues and your friends, and they become really good friends. I worked in equity research, and a lot of that was about writing. And both my direct manager and my manager's manager, they were really good writers, and they would correct my work, and I just learned not to take it personally. And I have to say, in my last job, there's a gentleman who's a phenomenal writer, and I would often correct some of his work, and I felt bad about it. And I said that to him once, and he said, I don't love the edits, but your edits always make my work better. And that's a reflection of his professional maturity. So I still write now. And I work with 2 people who are really good writers. And they provide some feedback. And I'll be honest with you, I usually don't care for the edits, but they're usually spot on, and they come from a good spot. And that's the only way you're going to get better at that type of skill. And also read Tolstoy if you want to know how to tell a story.
Okay, thank you so much.
The next question comes from Krish Parikh. This student has asked me to ask the question for them. So this is kind of a controversial question. I know that a lot of students in this.
That's all right. Give it to me. I'll just choose not to answer it if I don't.
All right. So what do you think about the future of stock trading, given the discrepancies caused by the Reddit group Wall Street Bets?
I think the answer to that is actually pretty straightforward. If you're a consumer, there's no better time to have wanted to be involved in financial markets. Like, you have every option available to you now. You want to have a personal advisor? There are all kinds of firms with really good people, RBC obviously the best, but really good people who are ready to help you on that journey. Very well qualified, really, very well experienced. If you want to do it all by yourself, lots of amazing businesses, of course, RBC Direct Investing being the best, where you can go and execute those trades. If you want to, if you're more focused on fees, you want a little bit of help, and you want to do it all digitally, we have RBC InvestEase, right? Every option is available for you out there. So it's all built around the consumer. And I think that's just a really good outcome. I think that's the most important part of the answer. Now, this is more of a personal commentary, but I would say, I'm not really sure how much I buy into the GameStop Reddit. Like, obviously it played a significant role, but I'll tell you this. I worked at E-Trade in the year 2000, and the similarities between what we saw in GameStop is very similar to what we saw in stocks like eToys, which was an online retailer selling toys, or this company called At Home that had negative 70% gross margins. And these companies had market caps in the tens of billions of dollars. And, you know, the theory back then was it's all driven by internet message boards. Well, not really, because we've seen, and I'm not saying this is what the GameStop experience was, but we've seen pump and dump schemes before. They predate the internet, right? We've seen spectacular rises and falls in individual securities before. And that's why it's, you know, often said that these markets are driven by greed and fear. So that's kind of my answer. If you are looking to invest, there are all kinds of options available for you. And I think that's really wonderful for a consumer. And the most important consideration is to choose the right path for you. Do your best to make sure you know what you're doing. And as it relates to hype and mania. I would just point out, have a look at where the stock market was last March, not even a year ago. Reddit existed in March of 2020, right? So I'm not sure this is so much a Reddit phenomenon as it is just a different platform and avenue where we see the emotions of greed and fear manifest themselves in pockets of the market.
Our next question comes from Utkarsh Singh.
Hi, Rajan. My name is Utkarsh, and I'm a first-year Rotten student. And my question to you is, what would a first-year BBA student like myself would be doing right now to have a successful career in fields such as portfolio management? And I know you spoke about developing writing skills, but what other experiences would they be looking forward to have, or what other skills would they be developing? And just in general, what would they be allocating their time towards right now?
Good news and bad news. Good news is I'm going to answer the question, and the bad news is you're not going to like the answer. The answer is it depends. If it's someone like at the end of the day, and again, this is not directed to the person asking the question, and it might sound a little curt, but none of us are owed anything by completing our degree. We've just completed a course of study, and we've had an achievement awarded to us. When it comes to getting a position, that depends. What are the hard skills? And when I say hard skills, that includes it might be programming, might be Excel skills, technical writing skills. What skills does that person have? On the softer skills side, what leadership? So for the people who are involved with this association, in the leadership of it, I think that's a great example of leadership skills. I know there's many other people at Laurentian and other universities who volunteer in their community. Honestly, as a person that has a 5-year-old, and I've posted this on LinkedIn, I am just so terrifically inspired by the Finance Association of Laurentian, who's put this together. Because they haven't done it for themselves. They've done it to help other people. And as I go through individual profiles and I see their jobs outside of school, that reminds me of my own journey. I worked in a car wash. These are not glamorous jobs. I worked for minimum wage at a car wash. I worked at a Canadian Tire. They were valuable jobs. And some of the skills that I picked up were working with a manager, working with people who can be difficult, receiving feedback, being able to communicate, having empathy with your clients. They're all applicable skills. And I think what really matters is how do you take your hard skills, soft skills, your relationship building skills, and how do you apply that to solving problems for a business? At the end of the day, a black and white way to look at an employment opportunity is somebody with a business needs to solve a problem, and they're essentially paying you to be there to solve that problem. So the job that you get is, where do you intersect with an employer looking for a problem to be solved for their customers?
Thank you, Rajan.
Thank you, Akarsh. Our next question comes from Brandon Roy.
Hello, Rajan. My name is Brandon Roy. I'm a student of behavioral neuroscience and computer science of Laurentian. I'm also an associate of the Finance Association. I just wanted to thank you for being here with us. I know many of us deeply appreciate it. And my question is, how much of asset management, perhaps in this case in your business, is delegated to machine learning and artificial intelligence?
Right. So the quick and straight answer to you for my business is none. We offer portfolios that are index portfolios to keep fees down. So those are exchange traded funds. So ETFs and the construction of ETFs, there's a lot of technology involved there to optimize and minimize tracking error to an index, but not AI or machine learning. That having been said, I think there's lots of really interesting examples of using technology for those on the sell side, but increasingly just those large asset managers are developing bespoke models to help them manage their money. So I can't give you a uniform answer, but I would say, at the end of the day, just think of technology as a tool that will help someone manage their money. So I think there's been some examples of how in the U.S. at least, some large asset managers have determined they don't need as many analysts and associates to comb through financial data and spreadsheets. They can give that to a machine, but they still need their analysts and associates to provide the context around what that means for a portfolio and then to make the final decision.
Perfect. Thank you.
Thank you, Brandon. So our next question comes from Tyler Street.
Hello, can you hear me all right?
Yeah.
Perfect. Hello, my name is Tyler Street. Thank you again for coming out to do this today. We really all appreciate it. I'm a second-year student here at Waterloo in the Accounting and Finance program. So my question for you, it's more of a personal investment question, RBC direct investing right there. So my question for you is there a need to diversify between fund providers, say your Vanguard and your Schwab or your Fidelity? I can break this down to two parts. So what if for whatever reason, our friend at Vanguard who's hosting the total market ETF decides to sell all our equity and put it into corn futures or something random? Like what kind of protections are there around that? And the second is if Vanguard goes bankrupt or Fidelity, whoever, what does that mean for me and like what's going to happen to the funds I have in there?
Yeah, so I mean, I can't provide legal advice, but here's the way that I would think about it. When you're buying a security, and it's managed by a portfolio management team, this is finance. You should only deal with someone that you trust. And at the end of the day, to know your protections, you're going to have to do the dirty work of reading your prospectus and or any other contracts, investment information. But do you need to diversify across providers? Not necessarily, because if you like and trust who you work with, then you should continue to work with them. With regards to just have to remember, like when you invest in a mutual fund or an ETF, they're essentially a trust, and you're a unit holder, and somebody else manages it, but you own it. So if they decide they don't want to manage it anymore, there is a net asset value of that trust, which owns other securities, and it can be liquidated, and individuals would receive their portion, and that happens quite regularly with mutual funds or ETFs that are discontinued.
Yeah, appreciate it.
Our next question comes from Otto Priyati. This student has asked that I ask for them. What makes RBC InvestEase different from the competitors? For example, Wealthsimple.
Yeah, look, I mean, this is a competitive space, and there's one entity that I care about in running this business. And it's you. Honestly, I don't pay a lot of attention to my competitors, and I'm going to be honest with you. I would be surprised if they paid attention to each other, because we're not solving for our competitors. We're solving for Canadians. We're solving for clients. We're solving for individual pain points. So we spend our time in understanding why is it so many millions of Canadians have not started to save and invest. How do we make it easier? When they land on our website, going through our discovery, if people are dropping off, why are they dropping off? Is it because they're just checking out what this is, or have we done something that's not convenient, or there's friction there that we need to remove? What are the solutions people are looking for? I point to the responsible investing portfolios that we offer. We have spent exactly $0 marketing those solutions. But if I go back to last summer, even though it was very busy, that our page that talked about those responsible investing solutions was the most visited page of all RBC InvestEase online properties, because people heard about it, they were signing up for it, and they were telling their friends about it. So for us, we don't pride ourselves, we're not a technology company. We are proud of being a bank. We are proud of being Canada's largest bank. We are proud of being Canada's most trusted brand. We have been managing investments for generations. We take our obligation and commitment to Canadians very seriously. And as a result, when you're an RBC client, you open your mobile app, everything's in one spot. You can see everything that you have there, your student credit card, your bank account, your investment account. Like I said, we take our reputation and that brand promise very seriously. So it takes me a long time to fill open positions for people who give advice. And that's because our clients deserve the very best. And it's not easy to find people who have CFAs, CIMs with good portfolio management and client care experience. And that's it. We are completely and totally client obsessed. And from my perspective, that and the team that we've built, we've got the best team, we've got the right focus. That's all I'm really focused on.
Well, thank you so much for that. So with respect to time, we're going to have to end it there. I'd like to say on behalf of all the attendees, as well as the team from the Finance Association of Laurentian University, I'd like to just say thank you so much, Rajan, for coming and spending the time to educate all of us and answer our questions.
My pleasure. Thanks for having me.
Thank you very much, Rajan.
All right, we'll see you guys later.
Thank you.
Thanks, Travis. Thanks for hosting.
No problem. See you all soon.